Hello, I'm Austin, and welcome to our second quarter 2026 market outlook. Whether you're a current client or joining us for the first time, we hope you find value in the insights from our advisors at Capital Strategies Group. As certified financial planner practitioners, we take an unbiased and fiduciary approach to the work that we do. We're always keeping a close eye on market movements and staying well informed. That said, just because we're sharing our insights with you today doesn't mean adjustments are warranted in your portfolio. News headlines can create a sense of urgency, and not every situation necessitates immediate action or intervention. As we move further into 2026, the investment environment continues to evolve. What began as a year of stabilization with moderating inflation and a more balanced economy has recently been challenged by a new wave of uncertainty. Most notably, the escalation of the conflict in the Middle East involving Iran has reintroduced geopolitical risk into the conversation. As we share a few thoughts about this conflict, it's important to recognize that this conflict is rapidly evolving. Each day presents new information, and the topics we discuss today could change quickly as the situation progresses. We believe that, to the extent this war can be resolved in the next 2 to 3 weeks, our economy will likely move forward in a healthy way. If the war continues to drag out for an extended period of time, we may see some more lasting effects on the economy, particularly with elevated oil prices affecting corporate profits, jobs, and economic growth. While these events are serious and worth monitoring, it's important to keep perspective. Markets have historically shown an ability to absorb geopolitical shocks over time. However, we're not naive to the impact this has had on oil prices, which affects companies around the world. Higher oil prices can ripple through the economy, influencing transportation, production costs, and ultimately consumer prices. Some analysts believe that due to higher oil prices, inflation is showing signs of reaccelerating, and corporate profits will likely be affected. However, to the extent that this war can be brought to a close in the next few weeks, we believe the oil shock implications on the economy may be moderated. As a result of the Iran conflict, the Federal Reserve now appears more likely to keep rates higher for longer to ensure inflation remains contained, which can create short-term pressure, but also reinforces longer-term economic stability by keeping inflation in check. Despite much of the attention being focused on geopolitical conflict, the underlying U.S. economy has continued to show resilience. After a softer February jobs report raised some concerns, March jobs data rebounded in a meaningful way. The economy added 178,000 jobs, which was well above expectations and the strongest monthly gain in over a year, while the unemployment rate edged lower to 4.3%. Taken together, this suggests that, even amid uncertainty, the labor market remains healthy and continues to support overall economic stability. Despite the uncertainty with the Iran war, economists note several positive economic indicators that are likely to offer support to other aspects of the economy in 2026, namely the beginning of new, more favorable tax laws for individuals and corporations that started in January of 2026. They also see continued investment in AI infrastructure and the ongoing productivity gains created by AI investment and development as an economic stimulator. So when we step back, the picture is not so one-sided. There are clearly challenges: geopolitical uncertainty, energy uncertainty, and inflation pressures. But these challenges are partially counterbalanced in the form of individual and corporate tax breaks and continued AI infrastructure build-out. As always, our focus remains on helping you stay grounded in that bigger picture, not reacting to every headline, but staying aligned with a disciplined, long-term approach designed to navigate both the risks and the opportunities that environments like this can present, while also continuing to position portfolios for durable growth over time. For clients of Capital Strategies Group, you can be assured that we are aware of the geopolitical and economic events happening in the world, and we're positioning your portfolio to navigate these periods appropriately. We appreciate you taking time to join us for the second quarter economic and market outlook. If you aren't currently a client of Capital Strategies Group and would benefit from having an expert at the helm helping you navigate this challenging market landscape, we invite you to reach out to us. Take care, and thank you for watching.